Hello, this is Richard C. Wilson of the Family Office Club. We're doing an investor mandate interview today with Paul from the Welcome, Paul.
Thank you, Richard. Great to be here.
Sure. And so what does your firm do? What type of investment firm are you?
We are a multifamily office advisor. We're based between Boston and London. We manage about $7 billion for about 40 families globally. So we help these families really oversee their broader wealth situation and really their aggregate balance sheet. So we've got kind of our hands in everything.
Sure. And I know one thing that makes you a bit unique is that almost all your clients are doing direct investments almost all the time. A lot of wealth management firms or multifamily offices are either not excellent in direct investments, or they might just, tie someone into a CRE broker or a couple outside advisors, where you guys are really kind of overseeing a lot of these, or sometimes helping structure a project to make it more tax efficient. And can you talk a little bit as to, for how long you've been doing those types of deals and why you're so different than the other multifamily offices that just stick to publicly traded fund managers, things of that nature?
Sure. We've been investing direct both in real estate as well as direct private equity, private credit for about 10 years. It's a capability we built up over time. We tend to work with more sophisticated clients and family offices. Our typical client are actually money managers themselves, so they tend to have a desire for other types of non-traditional exposure and kind of a desire to get closer to the asset. So it's a capability that we developed. We've built up over time. We've built a team around those opportunities, and as you suggested, we have the ability to not only source, originate, negotiate, structure, and then help with the ongoing management and monitoring of those investments as well, both again on the real estate side as well as private equity.
Sure. And I'm sure some listeners might be interested in hearing for a shop like yours that's sophisticated and can move quickly when needed, what percentage of your client base of the ultra wealthy are really trying to be maneuvering into either a distressed real estate fund right now, or how many of them are trying to make a play right now in a big way to invest and take advantage of what's happening so that they get great returns as it moves up? Is that something that just is managed by your portfolio managers and they shift things around to make things more efficient on what they think is best? Or are your clients hands-on negotiating transactions right now and taking big steps to put bets on the table?
I would say that the overwhelming majority of our clients have an interest in taking advantage of the current dislocation in some way, shape, or form. Some of that we're evaluating the TALF trade, we're evaluating distressed private equity funds, distressed real estate funds, but certainly we are looking at a lot of interesting direct distressed opportunities for lending, as well as taking direct pieces of assets, equity and assets.
Sure. Yeah, I know. One of my clients just filled his warehouse with raw materials that he got at 50% off because his suppliers wanted the sales, and he was able to put down the money for 2 years worth of supplies for his core business, which is one thing that he just made a big investment in. So that makes sense. We're seeing a lot of investors asking for such strategies, but they're obviously, just like anytime when you're making an investment, trying to figure out who you can trust, who's got a track record when there's such a big bull market for so long. A lot of people were used to playing in that type of scenario and weren't built for doing distressed deals, right? So I think that there's more of a need right now for advisors to kind of navigate all of that, it seems.
Yeah, absolutely. And especially, this is an area of the market that you definitely need to seek professional advice, because there's a lot of things that can go wrong, and you need to put in your kind of time and structuring up front.
Right. What about, one challenge is, I'm sure you guys get questions, where's the bottom? What's the plan? How do you try to be smart in timing such things? I know you have a 35 or 40 person team there, on Boston Commons. I've met maybe a dozen of them, when visiting your offices in the past. But how does your team respond to such questions from clients? How do you come up with kind of a staged plan that, is good with your team and good with communicating to clients so they don't get upset if they think you didn't pull out fast enough, or they probably want to hear what that cohesive plan is? That must be a big challenge when nobody knows where the bottom is. How are you guys handling that, just like strategically?
Sure. I think it really starts way before you have a crisis like this. I think the big difference today versus 2008, 2009 time frame that I lived through was that today I think family offices are better positioned, more cash. I think the other thing is you've just got to pay strategic attention to your overall asset allocation, and having kind of pockets of liquidity reserve for these types of opportunities. And so, when something like this comes, it's really about managing at the margin. We're not making the decision to be all in or all out of equities, or, whether it's selling at the bottom or trying to buy at the bottom. It's very hard, as we all know, to pick tops and bottoms. And it's just,
Right.
as I have one, famous investor that I'm close friends with that always says, you just want to be on the right side of the smile.
Right.
Realizing that opportunities like this, certainly some opportunities go away pretty quickly in this environment, but overall it's going to take time to work out of the current malaise, and, finding the right partner, whether it's an advisory firm like ours or investing direct with distressed managers, that know, where to pick their credits or their alphas or whatever. You're going to be much better served than looking at opportunities in isolation.
Right. Yeah. And I remember when you were on our virtual discussion panel, maybe 2 weeks ago, you mentioned sticking to your plan. I think it's kind of related to the answer you just gave there. So what would be the number one piece of advice that we could leave investors with here today? Something that would save them $100,000 in wasted fees, wasted time, frustration, or help them, make more money over the medium to longer term? What would be kind of the number one, most powerful piece of advice that you could give them?
Number one piece of advice I would say is, things always take more money and more time. And it all comes down to position sizing, thinking really about not betting the farm on, is this the bottom or is this the right manager, but, size your positions accordingly.
Right. Okay. Great. Well, I appreciate your time here during this interview and on the panel recently. And I hope to see you again in one of our online events.
Thanks so much, Richard.
Take care,
Thanks.
Paul. Bye.
Bye-bye.